Check, please.
Welcome back to Everything Money. If you have been burned investing in NIO in the past, I do feel sorry for you. We'd love to show you some reasoning why we have avoided this stock for a year, but at a certain price with great financials, we're buyers of NIO. I'll show you our case. Go ahead, Paul. What would it take for us to buy NIO? What do we need to be at?
All right, so NIO is the number one EV car company in China.
Mm-hmm.
Is that correct?
That's how you pronounce it, I think. That's what the president's doing.
Well, former president.
Of course. No, Paul, he's still...
The current president is saying, Ion. Just kidding. I don't care either way, guys. They're both idiots. So, it's going to be so funny when I say they're both idiots and the Trump supporters will be like, you're an a-hole. And then the Biden supporters will be like, you're an a-hole. I'm like, oh, okay.
They already do that, Paul. Don't worry. You don't have to get politics involved.
Guys, if you already think I'm an a-hole, you haven't seen anything yet. Watch our other videos.
If you've gotten burned on NIO, Paul, we get so many messages in our community on Instagram thanking us, number one, for getting them out of NIO. But
no, I didn't tell anybody to get out of NIO, guys.
I know, but just showing them.
No, I'm never telling you to get in or out of a company. What I'm telling you is I'm teaching you a process. If that process speaks to you, you will make modifications of my process that fit with your personality and your thought process.
Yeah, so a lot of people got burned on this stock. We criticize this character, Stock Mo, just ad nauseum because
I prefer to change the word character to moron.
So many times. A year ago, almost to this date, he was telling you, crack open the champagne when this stock was at $60 because this company was going to $100 by the end of the year, which he then pushed back another year. And of course, instead of just throwing darts at random stock prices, we'd like to show you, Paul, you've come around on this company now that it has fallen so much. They do have growth. We'd like to say, what price are you buying NIO?
Okay, so let's look at our 8-pillar software. Click here. Type in NIO, pulls up.
Their deliveries are up 64% year to year. They delivered 24,000 cars last year, gross margin over 20. They lost $130 million. People are saying this is a cheap entry point for a great company moving forward.
So if we go to our 8 pillars here, there's not enough data. One of the things our 8 pillars needs, it needs 5 years of data. And you might sit there and say, well, that's not good. No, it is good because I want to see a track record. Just like I wouldn't give an athlete who has one good year, the maximum contract. I don't do that for the stock. I want to see a track record, see how the company behaves during good times and bad times. Does that mean you can't value these? No, you just have to be more conservative. Just be more conservative in your assumptions. So let's go to the income statement here. This is a lot of revenue growth. Mm-hmm. They went from no revenue in 2017 to 38, 1.3, 1.96, 5.2. Now, there's been a big surge in demand for cars in the U.S. Has that translated to China? I don't know. I assume so. But they're also growing like crazy because China's economy is growing, and a recession to China is like 5% GDP growth. And it has the fastest growing middle class in the world. This is perfect for a company like this. Let's look at their profit. Well, they've lost some money.
They lost less. That's good.
They lost less. Minus 203, minus 1, minus 1.8, minus 1, minus 500. So automatically, I don't know how to value this company because I like to see profit and some sort of path to profitability. But what we will do, I will assume the same numbers on profitability as other car companies in the world. Okay? Is that a good assumption or bad? I don't know. But it's an assumption I'm going to make just to see where we fall with NIO. So we created the stock analyzer tool for exactly this reason because we don't know the future. We don't know anything about the future. We have to make assumptions, and every investment's the present value of all future cash flow. And those future cash flows for us are going to be determined based on our assumptions, right? So what assumptions are we making? First off, I'm going to assume the company's going to be around for at least 10 years. I'm going to do a 10-year analysis. In our software, by the way, more information on the software, how you can get it for less than a cup of coffee later. Bless you, Seth. 1 to 20 years, I picked 10. Revenue growth.
All right, what do we do here? Not 160 a year?
15, 22.5, and 30% revenue growth. Now, let's see what 30% revenue growth for 10 years leads to. They did $5 billion. It leads to $69 billion in revenue. That's reasonable to me.
That is reasonable.
That's reasonable to me.
Mm-hmm.
So I actually might be too low on my revenue growth numbers. I'm actually going to go higher.
I was going to say go 15, 30, 45.
15, 30, 45. Okay, I like that. Profit margin. Guys, let's go 4, 6, and 8. Free cash flow, same thing. PE, 14, 16, 18, 14, 16, 18. 12.5% return. Guys, because this will be, you can get 9 or 10% by investing in an ETF. So if you're going to do extra work and have margin of safety, put in a higher return for yourself. Analyze. Okay, so we're getting close, but we're not there yet. Unless you believe the 40% revenue growth numbers, then this is a screaming deal at $73.
What's that low end?
Low end is $4.
Okay.
So even with our assumed 15% revenue growth, and assuming, and by the way, our model also assumes profitability next year, which you can't assume that. So I do believe that if this thing was around 10 or 12 bucks, I'd probably be looking at buying this company because I want margin of safety. And the less knowns I have, and the less track record I have, the more conservative I need to be. I would actually change the desired return here to actually
gotta be higher.
15, 17 and a half, and 20% returns.
We got to pay less now.
Yeah. So look, low teens.
That's what
closer
I
to 10 bucks.
That's what I talk about sometimes when Seth and I will do the a
Few
few
good
good
minutes.
minutes. I'll say, guys, on this investment, I want to get a little bit more. This would be one of those examples.
Now, I will say something. If you believe NIO is the car company for China, they have to do $173 billion in revenue to get 40% revenue growth, 45. I just don't think that's realistic.
Yeah.
Do you think they're going to be doing $250 billion in revenue in 10 years? Maybe. But Tesla didn't grow that fast. Tesla's not growing that fast. I just don't know. Your job is to be conservative. I'm a buyer of NIO around $10 a share. And even then, probably a little bit lower. I'll probably start and do some puts on there at lower prices, but I'm just not interested at $24. That's my opinion on it.
Question for you. How does that share dilution
Oh, I didn't even look at the
resonate
share
with you?
dilution.
Because, I mean, it's big.
Yeah, it's pretty big. That factors in, but the good news is it'll make up for the loss of cash flow. So instead of taking on debt, it's loss of cash flow.
Right.
So it's making up for the cash flow.
Right.
Hopefully it's a wash there. But you want to make sure they're not diluting because guys, issuing more shares is diluting you as an owner. If a company has 10 shares outstanding, you own one of them, you own 10% of the business. If they issue 2 more shares, now you own 1 share out of 12, which means you own 8.33%. You went from 10% to 8.33% doing nothing. They diluted you. Now, that can be okay if they're having losses and instead of taking on debt, they just issue shares going, listen, all these people want to buy our expensive stock. I'd rather have them do that than take on the debt. But it's something to consider. You want to make sure that once they get to cash flow profitability, they stop doing that. They start using their cash. And if they do issue more shares, it's for really, really good investment opportunities to grow. Because if a company issues 50% more shares and their revenue goes up 50%, you've seen no gain. Because before, you were splitting, if you have $10 in revenue on 10 shares, it's $1 per share. If you have $15 in revenue, 50% growth, but you have 50% more shares, it's now $15 in revenue divided up by 15 shares, it's $1 per share. It's the same level that you had before. You got no benefit from that. So they have to grow their revenue and profit at a faster pace than they're issuing shares in order to see some sort of value.
Paul, you've ingrained this in my mind, the concept of it's not what you're buying, it's what you're paying. And so, you know, we're buyers of Tesla at $75, not $1,200.
Yes,
and
we are. Well, I don't know. We haven't done the Tesla. Have we done the Tesla?
We were adamantly against buying NIO at these elevated prices when it was very popular to fall in love.
Well, I'm still adamantly against it. I'm still not buying NIO at 25, but I like NIO. Have you seen the NIO cars? They're good looking cars. NIO cars. I mean, this is a good looking car.
Mm-hmm.
Come on. I wish these would come to the U.S.
Yeah, that's sweet looking.
Pretty sweet to me. So I look at it going, listen, this is a good looking company and they're making a good product. So, okay, great. But the numbers have to make sense. The numbers still have to make sense for me.
Bottom line, baby.
That's it. I don't care how awesome it is. Ferrari is the best car, in my opinion, in the world. I'm not paying $20 trillion for Ferrari.
And when you take it to an extreme, it starts to... I've criticized you for taking it to extremes, but then you sort of rephrased your idea of taking it to extreme to hone in on NIO's not worth 0, is definitely not worth $60 a share. So
it's somewhere in between.
Where is that line, and how do we find better tools to find that line? I think that's what we're trying to deliver, as opposed to just random pick a high price and just say it's going there.
Life became easier for me investing when I started to realize that everything had a value. I just have to wait for the 10 million things I can buy out there. I got to wait for the 100 or so that hit the value that I want. That's it. I always tell people I would buy a bag of dog shit for $1 if I know I could sell it for $2 tomorrow. That's it. No difference. I would buy the best diamond in the world if I knew I could sell it for a higher profit sometime down the road. I'd buy I'm trying to buy as much cash flow as possible for as little as possible. Because if I get a diversified holding of not car companies, companies in general, 30 stocks, they're all increasing their cash flow. I do believe that if I pay a reasonable price today, over time, that reasonable price will pay out in the future. They'll be worth more money. That's the whole theory here. Not even theory. It's not even a theory. It's absolute fact that if you pay a reasonable price for cash flow today and that cash flow increases, that over long periods of time, your value will go up. The question is, how much will it go up?
If you're interested in trading NIO, you can join Mo in the Business Nation. He can guide you and others. Go ahead, Mo. Tell us about what's going on with NIO over there.
Guys, I'm going to tell you now, if you're so inclined to do this, this is not something I recommend. Trading long-term with NIO, you certainly can. But again, I just wouldn't recommend it just because it doesn't have a lot of track record. The volatility is constantly there. But if you wanted to, of course, you just wait until you move into the sweet spot and start riding to the top. And you'll notice, I talk about this all the time, your stochastics are getting lower highs as they go. So this is just a very strong trend down that it's going to be very difficult for NIO to break. What I would rather everybody do, and what I will do on this, is come over and swing trade this. The difficulty you're going to have is you need to get above these moving averages to be able to go any higher. So I would wait till this turns into a short, let it come down, and then just keep riding it up to that 25-day moving average over and over and just keep playing it that way. NIO is also a great stock to day trade. Why? Because it gets that constant volatility. Our good friend MJ, he day trades this all the time.
Oh, he day trades NIO all the time?
Yeah. So what you want to see is what we're looking for to go long on a position is to be over this red line right here. You want to be over 80%. You notice how consistently every day NIO has some type of time during the day where they're over 80%. And usually when it
20.
goes, pardon me?
And below 20.
Yeah, and below 20.
And below 20, but look, it's never below 20.
It's so bipolar.
Well,
yeah,
close.
it's nuts. But when it does go above 80%, it goes, and it'll give you 3, 4, 5% a day. So this is definitely one to keep on a watch list for quick trades. So if you want to learn these rules, come join me in the Bid and Ask.
If you're drawn to these steps about analyzing a stock using our 8 pillars, you can click the card in the upper right-hand corner, and it'll show you a video where we go deep dive into this concept. Hey guys, Seth here, jumping in real quick. We'll get right back to the video, but I want to let you know you can join our software. You can get access to this financial data and the new Everything Money chat right in your phone. Paul will tell you how to get it right now.
So guys, we created the software because our users wanted to be able to analyze their own stocks without having to wait for us. So we put hundreds of thousands of dollars, made the software. You get 30 years of financial data. You get access to Seth, Mo, and I, 8-pillar analysis, the stock analyzer tool, the retirement calculator, and you get everything on this main page that is coming soon. This is all included. And if you look right here, these are all the things you get. You get everything on a mobile phone. Everything we're talking about here is ready, available on your mobile app. One app for everything. But most importantly, guys, you get our Discord, our community of, now it's off of Discord. It's right in our app. You get a community of over 6,000 people you can talk to every single day about your investment ideas. If you're like them, you felt alone having these ideas about investing that weren't reciprocated by others, but now you found the community here. And this is all available for only $1 per day. Less than a cup of coffee. If this can make you 1 or 2% or save you 1 or 2% of losses every year, it will lead to hundreds of thousands, if not millions. $1 per day, 2 ways to sign up. everythingmoney.com or Patreon. The benefit of everythingmoney.com is we're not large enough yet to charge sales tax, so you won't be charged sales tax quite yet. And look at this, guys. You get all of this. Our competitors are a lot more money and don't provide as much. $1 per day. Go sign up now.
Paul, final take on NIO. I was hoping deep down,
you have a price that you liked, that I liked, and I wanted to buy and all that stuff.
Yeah.
And there will be a time when that happens. It's just, I put it in the too hard to understand pile. And it literally is the too hard to understand pile. Now, do I have a value for it? Sure, but I got to be conservative. And I think to myself, yeah, $10, $8, assuming no dilution. I mean, am I willing to take a flyer on a company like NIO? Not a huge position because they have huge potential in China at a reasonable price? Absolutely.
Reasonable price. That's
reasonable
the key.
price.
That's just it.
I'm not disagreeing that something can be amazing. The question is, am I paying a reasonable price?
That's our take. Final thumbs up. Watch more videos. We'll see you.